If you are a startup looking to grow in Cambridge, the Bradfield Centre offers a range of flexible membership packages which put you in control of your office and home working mix. There's a vibrant, collaborative atmosphere, on-site cafe, plenty of green outside space, and regular member social events. For more information, visit bradfieldcentre.com or call 01223 919 600.
Welcome to the Cambridge Tech Podcast, talking all things technology from the heart of the UK's tech capital. Here are your hosts, Faye Holland and James Parton.
Hi, I'm James.
And I'm Faye. So, James, how was your week?
I've actually got quite a lot to share this week, which is a nice change. So I had a really nice catch up with Ziki, Deborah and Louise from Mills and Reeves. So we've got some ideas brewing in terms of some stuff we can do together. HackEd, the hack day that we're planning for Cambridge Tech Week for 16 to 18-year-olds is really starting to shape up, and pleased to report that pretty much all the student places have now been taken. So if you are listening and you do want to participate, please do get in touch as soon as possible. And for folks that aren't students, please do come along to watch the pitches for them teams, which is on Thursday, the 18th of September. I know there's a lot to do that week, but it's going to be really good. So I'd highly recommend it. And you can find the registration link for those tickets on the Bradfield website on the events page. What else have I been up to? I've had a couple of meetings to start planning for this year's Trinity Bradfield Prize. We're obviously always looking at ways to keep that fresh and impactful. Had some follow-up this week with one of the startups that came over from Maryland in the US. So it's nice to see some opportunities developing from those kinds of visits. Planning some future podcast stuff. And finally, last night it was back to being in 1995. We had no internet, so I don't know if you've seen the news, but Starlink, Mr. Musk's global satellite internet service, had a complete global outage for 3 hours yesterday.
Ooh.
So yeah, like 6.5 million people worldwide were without connectivity. So lucky for us, it was fairly late in the evening in the UK, so it didn't really heavily impact us. But I can only imagine the chaos it must have caused, to global business, and of course even Ukraine is heavily reliant on it for their military as well. So yeah, there's going to be a bit of a backlash, I think, from the back of that. So there you go. There's my update.
Crikey. Well, that's a very varied update and quite a lot from you. I'm very, very impressed. Did you work hard on that?
I did. It took like 3 seconds, about 5 minutes before I logged on to the call. Yeah.
Did it? And I like it that you bolstered it with the whole Starlink story as well. So,
yeah,
I feel like the cheap relative, the poor relative.
I thought we're becoming like we're becoming consumer news now. I thought we're like the one show now. Right?
Oh really? Crikey. Okay, that's an entirely different place. Let me have a think. So I actually did very little then last week compared to you. I had the last of the summer soirees, so I went out with the team at Alan Boswell Group, which was very lovely. Caught up with Beck Simmons, who's now got a new role, and many other people, so that was great. To be honest, the rest of last week was heads down, just trying to get on with doing some work. So, and I think it's going to carry on like that for the next few weeks. So I'll have to make up some consumer news and maybe start watching the One Show to get some new content for you.
I am conscious I said we're like the One Show and I've never watched the One Show, but there you go.
It's probably watching the TV where they sing the One Show, but I'm definitely not going to go there. The royal family, wasn't it? Anyway, curveball. So let me think, what else? A lot of our time is now going to be spent, like you've just talked about, HackEd. So much going on for Cambridge Tech Week. You can see things really, really ramping up. So from my side, it was the judging or the pre-judging to identify the shortlist for the pitch competition. So I think there were the long list of qualified companies were around about 60. We'll do a press release then so you can have the proper numbers. But really, really varied. So again, I do not envy those people pre-judging. But the plan is this week now we get down to the final 5 finalists who are going to present on September the 17th. So you can can see with what you've just said, what I'm talking about, how many things are really starting to ramp. So get your tickets. Make sure that you head over to cambridgetechweek.co.uk and follow on social media, #CamTechWeek, for all of the updates. So that's that. Let's crack on with the news. There are a few pieces of news this week. So we'll start with Cambridge cybersecurity specialist Darktrace. They have paid an undisclosed sum to acquire Mirror Security in Harmony, Pennsylvania. Mirror is a leading provider of network traffic visibility solutions, and the acquisition is designed to strengthen Darktrace's network security leadership by providing more insight from encrypted network traffic, more comprehensive decryption for customers in regulated industries, and help drive the next generation of Darktrace technology. The plan is combined that Darktrace and Mirror Security close the encrypted data blind spot without impacting network performance or requiring complex re-architecting. Mirror Security's engineering teams in Centurion, South Africa and the United States will join Darktrace's R&D division.
Cambridge-based Barakel literally struck gold as the winner of the Asian-driven Global Award, along with a haul of $1 million. Held outside of Hong Kong for the first time ever, the Terror Award event, organised by Full Vision Capital, was held at King's College, Cambridge, with more than 100 industry leaders, entrepreneurs, scientists, investors, scholars and partners attending. Barakel beat competition from 785 entries from 76 countries and regions. Its technology eliminates harmful refrigerants and boosts energy efficiency, offering sustainable air conditioning and refrigeration solutions. Based on over a decade of research from the University of Cambridge, Barakel's innovation is said to deliver up to 3 times the energy efficiency of traditional systems. So congratulations to them.
Absolutely. And it's great that this award has been brought to Cambridge. So yes, Cambridge is open. Bring your awards, bring your events over to Cambridge. We're quite good at hosting them. Next piece of news, South Korean battery startup Greenergy has signed a supply agreement with Cambridge Advanced Battery Materials company Ekion Technologies to apply its niobium-based anode material XNO to the next generation fast-charging battery system it is developing. The XNO battery using this material is evaluated as an innovative technology that guarantees fast charging and long life, even in extreme environments, and overcomes the limitations of existing graphite materials. In particular, the battery is expected to have an energy density that is improved by more than 50% compared to the existing lithium titanate version, and the cost is expected to be reduced by more than 20%. Ekion's CEO, Jean-Deliver Pillier, said the collaboration with Greenergy is a very important milestone in accelerating the global commercialisation of XNO. We look forward to working together to provide sustainable and innovative solutions in the global battery market.
Some research from property specialist Bidwells shows the strongest first half performance in the Cambridge office market since 2019. Take-up reached 241,000 square feet in the first half of this year, reflecting sustained demand driven by the growth of science and technology occupiers and the city's continued evolution as a global knowledge hub. Detailed in the Cambridge Databook, the standout transaction was Arm's expansion, with the tech giant acquiring an additional 95,000 square feet at its current site in Cambridge. Beyond this, there was a healthy spread of activity across a range of occupiers and demand concentrated in science parks and edge of city locations. Notably, 77% of current office requirements are from science and technology companies, including life sciences, with combined office and lab demand from knowledge-intensive industries dominating 88% of total requirements.
Yeah, so I think that pressure on properties still continues. You know, we've got some big developments going up in and around Cambridge, and I know many more on planned. So, yeah, it's definitely one to watch. So the final piece of news is the shortlist has been announced for the 35th anniversary of the Business Weekly Awards. The finalists include lots of companies, including some of those that we've covered on the news and some that have been guests of the podcast. So, for example, Anthrotech, Bango, Biotrip Therapeutics, Hooten Bio, Quantinuum, Raspberry Pi and Wave Photonics. So the winners will all be announced at a banquet, again the same week as Cambridge Tech Week, Monday the 15th of September at Queen's College in Cambridge. And that's it for the news. So let's move on to this week's episode, which, James, you recorded while I was away. So the interview with James is with Andrew Williamson, managing partner of Cambridge Innovation Capital, about a research report on the performance of spinouts. So let's all find out what you both talked about.
So, Andrew, welcome to Cambridge Tech Podcast. I'm actually surprised it's taken nearly 3 years to get you on the show. We'll talk about a lot of things, I think, in this episode. The UK Government Spin-Out Review, which you co-authored with Professor Irene Tracy. But first, this is your debut appearance. Why don't we get to know you a little bit better? So could you give us a flavour of your kind of background, your career, and what led you to CIC?
Yeah, sure. Delighted to. So my career has basically been the same journey as a lot of the founders that we back and invest in. So I grew up in an academic family here in the UK. My father was a professor of materials at Imperial College, and I studied here as an undergraduate. I did NatSci and majored in theoretical physics, and then stayed in Cambridge and did a PhD in computational sort of quantum physics simulations. So doing things that today would look a little bit like quantum computing, would look a little bit like machine learning and AI, a little bit like semiconductors, but none of those things existed at that time. And so we weren't called those things. And then when I graduated, so this is in the mid-90s, I was looking to do something exciting and impactful sort of in the field of particularly sort of physics and computation and materials. And probably something slightly more commercial was the long-term goal. And frankly, I didn't see that many opportunities in the UK at that point. I sort of interviewed with people like ICI. I interviewed with a couple of the investment banks, which is where a lot of the physicists were going to be quants at that time. So I moved out to the States, initially on a career track. So I did a postdoc. My first job out of graduate school was a postdoc at the National Renewable Energy Lab in Colorado. So that's the US Department of Energy's clean tech lab. And I worked on solar energy. Mm-hmm. So this is in the 90s when solar was not really commercial at all. So our customers were people like NASA, and we were designing the panels for the very first Mars rovers, and those kind of things. Then I moved to the Bay Area in about 2000, and I worked in another one of the DOE labs, so Lawrence Livermore lab, running a research group that was developing advanced materials, again, for energy applications. So my group was working on batteries, on fuel cells, on hydrogen, those sort of next generation clean technologies, mostly funding from groups like DARPA, that's in the news a lot now because we have ARIA here in the UK, which is sort of modeling that model, which I think is very powerful. All on the computational side. So I never got my hands dirty actually making materials. We just simulated them on the high performance computers. And one of the reasons I went to Berkeley was they had the largest supercomputer in the world at that time. It was amazing to run on that. So I did that for 5 or 6 years. And after living in the Bay Area for that period of time, you get sucked into the entrepreneurial culture there. And it's my wife works in biotech, so I was working in what you would call tech, I guess. Yeah. And every dinner party you go to, every sort of school playground conversation you have is around science and technology and entrepreneurship and innovation and venture capital. And so you sort of starts getting sucked into it. I started doing some consulting for some big and small tech companies. And one thing led to another. I did an executive MBA program at Berkeley. And with an eye to sort of transitioning from the sort of doing of science and technology to the investing in science and technology, and ended up joining a venture capital firm led by my private equity professor. So my professor, a chap called Will Rosenzweig, ran the entrepreneurship and venture capital program at Berkeley. He ran a fund and sort of hired his favorite student. And so I went in there in sort of, I think it was 06, and started making investments in what we would call deep tech today. Did that for a couple of funds. It was an amazing experience sort of working in the Bay Area deep tech community. Then I was involved in setting up a couple of businesses, one out of my old lab and then in the materials, in the medical devices space. And then my first big success was setting up a business out of Hughes Research Labs in the field of gallium nitrides. This is a company called Navitas, which makes power electronics from gallium nitride, which we may come back to because we're now an investor in the next generation of that business here in Cambridge. And Navitas was a bit of a rocket ship that went all the way to is now listed on the NASDAQ and multi-billion-pound company. So I had that sort of experience of founding some businesses. Then I moved to Chicago and I joined a really interesting firm called True North Venture Partners, which tries to apply the sort of private equity model of building businesses, so using lots of operating partners and sector expertise in a control model position to build companies with very specific theses around specific sectors that they wanted to invest in. And so I was leading energy and materials at True North, and I set up a couple of battery companies. We invested in hydrogen production, in water purification, so lots of clean tech things. And then around 2016, I got a call from a search firm to come and look at Cambridge Innovation Capital. And so at that time, I said, well, first of all, I said, don't be crazy. You guys are about to have your Brexit thing. And I'm happy to sit on the sidelines here in the States watching that all play out. And, good luck with that. But they said, no. You should, first of all, that's not going to happen. Don't worry about that. And, don't believe what a recruiter says. But they said, come and have a look at what's going on in Cambridge. You're going to be amazed at what's happened in that point. It was 20 years since I'd finished my PhD and moved to the States. So I came back and had a look, and I was amazed. And it was quite striking how, the university has, continued its core strengths and, met with my old professors who are still working in similar fields. Obviously, they've made some progress. But on the entrepreneurial and the innovation side, the town has just completely transformed.
Yeah. Yeah.
Where we're sitting now on Station Road used to be a pretty sketchy area they didn't really go to unless you had to. And now, obviously, we've got all these cool tech companies here. The science parks are thriving. There's all these kind of startups and stuff. So I could see a lot of, in 2016 in Cambridge, a lot of what the Bay Area, Silicon Valley had looked like maybe 20 years earlier. And so the opportunity to sort of come home and get involved on the ground floor of helping to create here in what Jeremy Hunt calls the UK Silicon Valley, but certainly I think the leading innovation and entrepreneurship ecosystem in Europe, and bring some of the expertise that I developed in the States to that and try and sort of fuse that with obviously a unique British culture was a great opportunity. So despite Brexit, I did come back.
Yeah, so it's interesting then. So it wasn't like you weren't, missing home and wanted to come back to the UK. It was actually through a kind of, a search process that actually planted that seed of an idea.
That's absolutely right.
Yeah. Okay, interesting. So, I mean, CIC has cropped up so many times on the podcast, the founders that we've spoken to, that you've invested in, Innovate Cambridge, it's all over. So just walk us through CIC, how it's set up, a little bit of the history of it, your investment focus, and maybe some of the superstars of the portfolio.
Yeah. So look, I mean, where we are today, we view CIC as one of the anchor institutions in the Cambridge ecosystem. We want to be the leading venture capital firm which is good at investing in the kind of companies that a science and technology-centric, university-centric research cluster like Cambridge is good at creating. Today, that sounds a fairly obvious thing to do, that those sectors are booming. There's so much innovation activity. There's so many investment opportunities. There's investors from all over the world coming in to be part of the cluster and invest in those companies. When we were set up 12 years ago, it wasn't quite so obvious. The ecosystem was accelerating. There was lots of early stage company formation, investment activity. So people like the university seed fund had been active for a while. The Cambridge Angels had been active for a decade and created some great companies. There were some seed funds like IQ Capital and Amadeus active in the ecosystem. So there was some early stage activity, but there wasn't any sort of mainstream venture activity in the ecosystem. Most of the venture activity was in London, and most of it was firms that were focused on sort of more traditional tech, consumer, social media, enterprise SaaS, fintech in London. But investing in deep tech or biotech, where there's a lot of science and technology risk involved in those businesses, wasn't something they were so actively doing. So we were a trailblazer at the time that we were set up, and obviously we've grown a lot since then. Yeah. So over the last decade, we've raised about $1 billion. We've invested in about 100 companies, about half of those directly through our funds, and half of those through a couple of accelerators, Start Codon and Deep Tech Labs, that we helped set up here in the ecosystem to support more early stage entrepreneurship. We have no quotas, no sort of fixed sectors that we want to invest in or not invest in. As I said, that mantra of sort of aligning ourselves with where the university has global leadership and where we think we can make good financial returns is sort of what sets the investment thesis. And, what you find is, Cambridge, the university and the ecosystem as a whole doesn't do everything by any means, but what it does do, it tends to do at a world-class level. So that sort of investment structure has stood us in good stead, and I think that's one we're going to continue to follow. The major trends that we're following and sort of the stars of the portfolio right now on the life sciences side is probably in the advanced therapeutics. So if you look at where in the world is the intellectual leadership in things like antibody technologies and next generation protein therapies, so antibody fragments and things like that, in stem cell therapy, gene therapy, Cambridge is right up there, probably just with the Bay Area and Boston, at least in the Western world, in leadership there. So there's a very strong flow of opportunities coming from fundamental research in the university, coming from the biotechnology park and things like that. And so we can talk about some of those. On the deep tech side of things, that's evolved quite a lot over the last decade that we've been in business. So the sort of anchor tech company for Cambridge is obviously Arm, and Arm plays a role here very similar to what Fairchild and then Intel did in the Bay Area sort of at the end of the 20th century. So they've created a critical mass of activity that draws in talent, draws in activity, and then throws off increasingly. Arm has now reached a scale where people go there for 5, 10, 20 years, gain amazing experience, leave and create their own companies or want to join startups. So they're fully integrated into sort of the virtuous circle, which is the sort of interaction between entrepreneurs and medium, small companies and large companies. And that circle is spinning very well now. It wasn't 10 years ago, I think. So that's scaled up. Semiconductors that sort of more broadly, Arm is really a semiconductor design company, a fabless silicon design company, but the broader semiconductor opportunity has grown a lot. So we talked a little bit about gallium nitride. We're an investor in Cambridge, gallium nitride, CamGan, a really exciting company out at the university. But more broadly, things like graphene and nanotubes, other composite semiconductors, that's a real strength. The telecom side of things, so the legacy of Cambridge Silicon Radio that's now part of Qualcomm. We're investing in next generation technologies in that space as well. So semis is really strong. Quantum's an area that I mentioned right at the beginning. My PhD was in quantum simulation on classical computers, but running algorithms that look quite similar to what one is going to soon be running on quantum computers. That's an area that we've had a generation of strength in, and it's interesting. We see quantum computing companies literally around the world. We were talking to one based in Australia the other day, where if you trace the sort of scientific origins of what in their case, sort of silicon spin qubit technology is based on, it goes back to fundamental semiconductor physics research in the Cavendish Laboratory here in Cambridge in the 90s and north. So we've had a long legacy of the fundamental science which goes into quantum computing, and that's an area that I'm increasingly excited about. We can maybe talk a bit more about. And then, of course, AI. So in the last 2 or 3 years, that's obviously dominated so much of the conversation initially in deep tech, but now obviously it's spreading into all other sectors and even our life science practice. AI is in almost everything. I never miss an opportunity to say last year, Cambridge alums won the Nobel Prizes in both physics and chemistry, right, as from their AI work, and I think Demis and what's going on at DeepMind is an inspiration to everyone. And I think I was, 5 years ago, I was a bit of an AI skeptic, that I thought it was really just sort of another computational technique, another sort of data science analysis technique. I didn't see it being quite such a disruptive technology. Now I am a convert, and some of the stuff we're seeing, particularly in AI for enabling science and enabling engineering, is super exciting, actually. And I think we're going to look back on where we are now in 5, 10, 20 years' time, and this will turn out to have been a huge inflection point. So we're trying to do as much of that as possible.
Yeah, it's exciting times. Thanks for that grounding. Really good summary there. So the kind of main topic of this conversation was the UK government spin-out review, which you, like I say, in the introduction, you co-authored with Irene Tracy. So before we dive into the detail of that, what was the context? How did you get involved in that? How did that come together?
The big picture context, first of all, is there's a very positive trend that we've seen in the UK, with Cambridge at the forefront, and I think this is across Europe over the last 10 or 20 years. This is part of why I moved back here, is a recognition at the government and policy level, but I think pervading through all of society, that science and technology-based innovation and entrepreneurship is going to be one of the key drivers of economic growth. And how all the conversations here about how we need growth in this country, to support the standards of living and the public services that we need to provide for. That's not a recognition that existed so much 30 years ago. In the States, this has been, up until very recently, was driving the whole sort of economic conversation since the Second World War. But it's something that the UK and Europe came to a little bit later, but has been very strong. And the so-called sort of science superpower agenda over the last decade has really, I think, been one of the key conversations, and I'm delighted to see that. If you look specifically in the UK about where is the innovation, where is the science and technology that's going to drive the science superpower agenda, it's not coming so much from corporate R&D labs, because over the last 20 or 30 years, that level of activity has declined in the UK. So, we don't have a GE or a Siemens or an Intel, or we didn't for a long time, at the scale that they had in the US, for example. It's starting to come back now with people like ARM and a lot of the activities here. So maybe that's on the correct trajectory. But historically, we haven't had that level. We also don't have a national lab innovation ecosystem of the sort that, when I worked at Berkeley Lab or NREL or Sandia or any of these places in the States, that's a great source of innovation as well. So what we do have, and what we really need to lean into, is maybe 4 of the top 10 science and technology research universities in the world, right? So when you look at the UK's sort of assets as a country, those universities, the IP and innovations that they are creating through taxpayer-funded research, and the talented and increasingly entrepreneurial students, graduate students, postdocs, academics that are doing that work, that's our key asset. And making that all it can be is really the conversation, is the context that drove this.
Yeah, no, that makes a lot of sense. So, the kind of report references, I guess, the exemplar ecosystems in the US, the Bay Area, Boston, San Diego. They're all cited as examples of what good looks like. And I'm not sure if this is kind of good old British humility or not, but I think there's a quote from the report that says, the golden triangle of Oxford, Cambridge, London has begun to exhibit many of the characteristics in the last few years of those ecosystems. So is that us being a little bit humble, or does that imply that actually there is still quite a lot of work and quite a big gap to close?
So when I wrote that paragraph, what I had in mind was this sort of concept of a critical size of an innovation ecosystem. So there's a scale at which activity becomes self-reinforcing. And you see this in multiple ways. So one good example would be for recruiting talent, right? When we want to recruit senior leadership into one of the portfolio companies that we've invested in, and we're looking around the world sometimes for leading talent, 10, 15 years ago, if we called somebody up in the Bay Area and said, come to Cambridge, it's this beautiful town, great standard of living, amazing schools, all that kind of stuff, come and lead this company, they would say, well, that company looks really interesting, but obviously it's a venture-backed company, it's early stage, there's quite a bit of risk, and if that doesn't work out, what else would I do? And I'm not sure I really want to move my family and all this and take that risk. Now, when we make that pitch, they look at Cambridge and they can see, well, that looks like a great opportunity. And, if that one doesn't work out, there's another one next to it down the street, and there's another one. So there's a scale of activity which makes it easier to come to the cluster, to engage in the cluster. Another way we see that is, when we're going to mostly talk about spin-outs today, spin-outs from universities, we're seeing an increasing number of what we call spin-ins. So this is companies created elsewhere in the world, and the investors, the management teams of the boards of those companies are asking themselves the question, for the next few years of our growth, where's the best place for us to be located? Where can we be around a pool of talent, an entrepreneurial culture, an infrastructure, a set of facilities, like-minded people that it's just cool to hang out with and do this kind of stuff together with? Cambridge comes right to the top of that. So I think the Golden Triangle as a whole, and Cambridge is sort of an exemplar of it, has just about got to that critical scale, which frankly you'd see in very, very few places around the world, Bay Area and Boston being the two obvious examples that we talked about. So that's how I think about it.
Yeah. So just picking up on that point in terms of spin-ins, what's the kind of ideal maturity stage of a company considering to come into an ecosystem like Cambridge? Is it kind of Series A, or is it a little earlier, more mature than that? What's the kind of sweet spot there?
There's one outlier, which is obviously AstraZeneca, who decided to spin into Cambridge 10 years ago to tap into the entrepreneurial culture and the talent base and the IP. And it's been, if you look at their stock price and the level of innovation, it's been amazing for them. But I think they are the exception that proves the rule. And I think the rule would be that, generally speaking, today, Cambridge's strength is still at the early stage, and it's at the science and technology, the research and development. That's where we've got the strongest differentiated sort of talent pool and set of ideas and folks, and there's a really rich stream of graduates from the university that you can tap into. So certainly, maybe I'm biased because our core business is around early stage venture, but yeah, I would say if you're seed Series A, you've got 5-10 people and you're thinking about where the next 50 people are going to come from, moving into the Science Park or Babraham or here onto Station Road and tapping into everything that Cambridge has to offer, that makes a lot of sense, I think.
Yeah, and I guess the Founders Programme from Cambridge Enterprise is a good example of that, because that's open to non-Cambridge companies as well, right?
Yeah, exactly. And similarly, within our own accelerator Start Code On, they've recruited companies from all over the country, and some very successful ones moved here to be part of that accelerator program and stayed because they like what they found here. And similar for Founders, I'm sure. Yeah.
So you note that the leading universities are adding considerable support services to their offerings, like entrepreneurial training, venture formation and building. And you kind of suggest that the preferred model is a public-private partnership. So can you kind of describe what that looks like?
Yeah, absolutely. So if you think about the journey of a technology and a founding team from sort of conception in a university, in this case, all the way to, let's call it, a world-leading, globally impactful company, there's multiple phases to that, right? So in the UK, we have a purely public university system. So the vast majority of fundamental science is funded by UKRI and the various agencies within UKRI, and that's funding within the university. So that's purely a public activity. 20 or 30 years ago, that's often where the journey stopped, right? That fundamental science was funded, and then there was a gap, a valley of death, whatever you call it, right? So a lot of what we're talking about and a lot of the progress that's been made in the last 20 or 30 years is how to move forward from there, right? So, and I think every university, every ecosystem is slightly different, and they're all on a journey. But the direction of travel, I think, is very similar for all universities, which is a recognition that they want to support the commercialization of the fundamental science and technology and innovation that they are creating through the fundamental research activities that are going on in the departments, that is a good thing for society as a whole, that societal benefit can be achieved through that commercialization. It's a good thing for the academics and the students, because a growing fraction of academics and students want to be involved with, want to see the impact of their fundamental research through that commercialization. So everyone is, I think, moving along that journey, and there's multiple steps in that. So there's an education component to that, which I think naturally lies within universities. So programs like all of the activities at the Judge Business School that are talking about how to do entrepreneurship, all of the activities that Cambridge Enterprise does around things like the Founders Program and the Postdoc Business Plan competition. There's a huge amount of behind-the-scenes support and mentoring and education, some of it in formal programs, a lot of it sort of in informal conversations and introductions and things. That's growing every year, and it's a fantastic thing. And you see that the fruits of that in so many different ways. Then you start to get money involved, right? And so because commercialization doesn't happen for free, right? And the types of money and the types of financial support change as a company grows. So one of often the first check that is required is what I would call proof of concept or translational funding. And so when Irene and I did this review and we spoke to something like 50 universities around the country, and in particular with the tech transfer offices, when I interviewed them all, the last question I would always ask is there anything I've missed, or there is no money, but if there were any, or if you could change one policy, you could change one rule, what would be most impactful in terms of increasing the quantity, the quality, the success rate of the spin-out activities in your university, your region? And I was expecting to get 50 different answers from 50 different interviews, but I actually got one answer 50 times, which was proof of concept funding. And it was the fact that fundamental science funding from UKRI only advances the technology to a certain point, and the most common challenge is that point is not far enough along for either a large pharmaceutical company in the case of life sciences or a technology company in the case of deep tech to say, I see the value in that and I just want to license that now, bring it into our company and commercialize it. Equally, in many cases, it's not advanced enough for investors to say, oh, yeah, we can see the commercial potential of that. I can see the product, the service that could happen there. And I'm willing to start writing multi-million-pound checks to support the productization of that technology. There's a gap. And so proof of concept funding, and often it can be quite modest funding in the scheme of what we're talking about here, a few $100K, so that more demonstration experiments, applicability in commercial sectors, that work can happen. So that, I think, is a great example of sort of the interface of the public-private space, where here in Cambridge, that was recognized a number of years ago. Cambridge Enterprise has launched something called the TIF. You might have talked about this on previous podcasts. It's the Translational Investment Fund. So this is grant funding to cover that proof of concept gap. We recommended in the review that the government should look at rolling it out a national equivalent of TIF, and there is now a national proof of concept fund. It's relatively modest. I think it's £40 million so far. And I think it's 10 to 1 oversubscribed or something like that. So that sort of proves out the demand for that proof of concept funding. So I think that's a good example of where, a little bit more public funding to start the journey of fundamental science into commercialization is a great space. Then you get into the whole world of equity funding, right? And there's super early stage equity funding. These days it might be called pre-seed, and then you're into seed, and then venture capital A, B, C rounds, and then the growth rounds. We're very fortunate here in the UK that at the early stage of that, we have a very supportive environment. So I'm sure you've talked on the podcast before about things like EIS and SEIS funding, which is essentially quite generous tax credits for making investments in what's called knowledge-intensive businesses, which everything we do would generally be covered by. VCT funding also has some tax advantage funding. So that's an example of sort of a public-private partnership in the sense that that's private investment, but with significant public support at that early stage. Similarly, R&D tax credits are I think they're quite generous here compared to the US, where they're non-existent. Companies would like more, obviously, but that is, again, public funding supporting or subsidizing the losses typically of early stage research businesses. So that's, I think, another good example. And then the most recent development would be the activities of the British Business Bank, which is supporting our sector as an investor in funds like ours, as an investor in companies directly, typically at their early stages, but increasingly into their growth stage as well. And through all kinds of other activities through COVID, for example, with things like loan guarantee programs. So the public purse, through all of these different activities, is actually pretty supportive at that sort of during that sort of challenging stage when you're trying to go from being a piece of fundamental science to demonstrating your commercial potential. But at some point, you have to get to the point where the purely private markets see the value, see the potential, and the baton is handed to institutional, financial, venture capital, private equity, and hopefully then public markets at some point. And so that's the transition that I see.
Yeah, I mean, I want to ask you about the university financing model, but just to maybe a kind of a question off the back of your last response. I guess because we all work in the cluster and the ecosystem, this all sounds super exciting and very sensible in terms of value generation for UK PLC. In the conversations you had with the universities, did they surface any tension about how they balance their requirements around being academic institutions and having that kind of environment for learning, research, experimentation, and that friction between becoming more commercially orientated and looking to generate more spin outs from those universities?
Yeah, I mean, so that's definitely a journey that I think all institutions have been on. I mean, if you go back a generation or so, there were quite a lot of concerns around the sort of tainting of fundamental science research by commercial interests, and would compromises be made? Would fundamental research funding be applied in the wrong areas because of commercial pressures? Those kind of things. I think that has largely played out now, actually, and that if you look at the current generation of most active academics, the majority would say that you've got to find a balance between generating societal impact and frankly, return for taxpayers from that investment that they have made in fundamental science. So I think when you look at the constraints and the sort of guardrails that have been put in place, the protections of sort of fundamental science, particularly I think one has to think about people at the beginning of their career. So the protection of undergraduates, graduate students and postdocs, and that they have the ability to do the highest quality science, to publish that science, begin their research careers. I think those protections are well in place. And so those were some tensions, but those were not the tensions that we were mostly focused on in this review. Those were, and we'll come to this in a second, I'm sure, were more financial tensions, I think, than philosophical tensions.
Yeah, which is the good segue to then move on to the financing model question. So the UK university financing models differs from the US. Do you think that's holding things back? And what's your view of the financing model for universities at the moment?
So I don't know, hand it back, but I mean, just so we have the right context here. So in the US, they have a mixed private and public university system. Like any system, it has its strengths and its weaknesses. I went to Berkeley, which is a public state school. It was a fantastic university, and I loved my time there. And right across the bay is its sort of arch rival Stanford, which is a private university, right, which has eye-wateringly high tuition fees that an increasingly small fraction of people can afford to pay. But those universities are both well-funded, have amazing facilities, and when it comes to things like entrepreneurship and innovation, have certainly been doing that for longer than certainly most UK universities, and are well-funded to do that. And so we can dig into some of that. Contrast that with the UK, where we have a purely publicly funded university system, which is much more accessible to the broader population, because tuition fees, although they're creeping up, are still relatively modest compared to the US. But that does mean that funding for universities as a whole is much more challenging, and I think has been becoming increasingly challenging over the last 10 or 20 years. And we have not worked this out yet. I mean, obviously, when the tuition fees went up to about £9,000, probably around a decade ago, they've been largely fixed since then. Inflation has resulted in those effectively halving almost in real terms compared to when that was put in place. The costs on universities to run their businesses have not halved over the same time. If anything, they've doubled, right? I mean, so we've seen considerable inflation costs for universities. And they've had to become increasingly creative in how they fill those gaps. And obviously, one of the topics that people talk a lot about is foreign students and who pay larger tuition fees, and that has plugged some of the gaps. So, but there is the whole context of this conversation is one where the operating budgets of universities across the country are challenged.
So how are the universities responding to this new demand on them in terms of, contributing in a meaningful way to the UK's innovation agenda? I've seen this actually at a local level in the work we do with Trinity. We do the Trinity Bradfield Prize and other activity, and you do see that kind of friction of distracting students from their studies because, you have to be a high achiever to get to the colleges in Cambridge. So, they definitely see that kind of friction and that balance. So, how are they responding to that?
Yeah, I mean, so when we did the review, the feedback we got from university leadership across the country was, at a time when we are financially constrained, the demands and the expectations on us are just growing. And it's true, right? I mean, these are institutions that were set up, in the case of Cambridge, 800 years ago, to be globally leading in education and fundamental research, and have done an amazing job of maintaining that global leadership position for centuries in the case of some universities. And then sort of in the last 20 or 30 years, they've been asked to do a third thing, which is become globally leading in supporting innovation and entrepreneurship. And I think it's quite reasonable for universities to say, we see that's important. We see that's a good thing for the national mission. We see that that's increasingly something that our students and academics would like us to do. So we're up for it. We'll engage in it. We'll do everything we can to be leaders. That's going to cost money as well. So we're going to have to figure out how to do that. And so I think, the country owes our university system a huge debt of gratitude that they've embraced this challenge, which wasn't an obvious challenge, of all who's going to lead sort of science and technology startup innovation in the country, that it would be the universities, but they have stepped up in an amazing way. There has been increased support from central government to do some of these activities, and we'll get into technical acronyms and things in the report. I talk a lot about what's called HIFE funding, Higher Education Innovation Funding. So that is new pools of capital for supporting things like the operations of tech transfer offices, some of the entrepreneurial education initiatives that we just discussed a bit earlier. So there has been some funding, but as you can imagine, like everything else in this sector, it probably wasn't fully funded. And, so the universities have had to become increasingly creative on how they fill the new gaps in this innovation agenda as well. And so I think that set the stage for some of the should we call it challenges or creative tension in the spin-out arena, which led to our review.
Yeah, I'll definitely kind of drill into some of those things in the next few questions. There is this need then for universities to do more around the support and encouragement of entrepreneurship and provide the kind of educational programs, the things like the accelerators that you've described, the TTO offices, all of those kinds of things. So that all requires investment, right? At the same time, the report talks about the need to deliver more founder-friendly terms. So you've got an interesting seesaw there, haven't you? There's an impact on the university to invest more in encouragement and support, and at the same time, potentially their upside on any potential exits reducing in terms of the deal terms that are being in place. So again, what's the kind of view there? What's the balance? What does good look like in your view in terms of the terms on offer?
Yeah. So the heroes of this story, or the piggies in the middle, as I call them, really, are the staff in the tech transfer offices. So they are sandwiched between a growing pool of academics who would like to commercialize the output of their research and are knocking on the door saying, I'd like help writing patents. I'd like help writing a business plan. I'd like help learning how to plan my business and recruit, entrepreneurs to support my business. I'd like investment in my business. I want. And then investors, the sort of the commercial sector, people like me, on the other side of the equation, saying we want all this output, we want to invest in more spin-outs, we want to do it more quickly, we want it on competitive investment terms. So because we're looking at, investors globally are looking at businesses around the world and looking at what they think are best practice for those setup terms. And trying to balance, and then they've got also the university administration, so sort of a third arm, saying, we've got challenged budgets, so we don't have a lot of funding to support the operations of this tech transfer office. And by the way, it'd be nice if you could generate some revenue for the university to offset, an increasing revenue gaps that we have. So a lot of pressures on these tech transfer offices. And a sort of perception that there might be a golden goose here, that you do read about in the press a growing number of unicorns, the billion-dollar enterprise value spin-outs from universities that if you think about it, could contribute potentially a significant amount of return back to the university. So they're trying to figure out what is the optimal set of policies, procedures, processes, programs to get as much of that great science out as quickly as possible, get it set up to be commercialized as quickly as possible with the highest probability of success to create the most value, and get a nice financial return for the university, for the inventors of the technology, for the academics and the entrepreneurs. So that's the challenge, as it were.
Yeah, and the 10-year university spin-out investment terms recommend, I believe, 10 to 25% stake in life sciences and under 10% for software. And you noted at the time of publication, which was November 23, so it'd be interesting to see if there's progress since the publication, that only half of the Russell Group universities were publishing their licensing policies, which didn't always include deal terms. So, has that improved, and who should be leading that kind of necessary cultural change there?
The context here is if you interview entrepreneurs, founders or investors, and we did a lot of that we spoke to, I think, over through various surveys and in roundtables and things, over 500 founders of spin-outs. I think nearly half of all the spin-outs that's happened in the last decade, on their experience of the process. Actually, there are sort of two main challenges, or two areas for improvement. The biggest one is speed. That, if you're operating in, well, the best example right now would be AI, right? Where you wake up every morning and there's a new version of Gemini or ChatGPT or something like that. So if you're trying to commercialize an algorithm in that space, time really matters. And if it takes you a 6 or a 12-month delay in launching your business because you're negotiating spin-out terms, that's obviously a major problem. Similar thing in healthcare, actually, right? Where there's big unmet medical needs, and if you've got a breakthrough potential drug, you want to get that to, on the clinical development process as quickly as possible. So speed was, I think, the biggest issue, and one of the biggest impediments to moving faster is obviously economic terms. And if one spends a lot of time going backwards and forwards negotiating economic terms, that slows down the process. And there are a couple of different economic terms. The one that made the headlines the most is the so-called equity split. So this is the percentage of a business at the time that it's founded, when it spins out of university, which is granted to the university in recognition, typically for essentially as an upfront payment to a license of the fundamental IP, which is going to be used in that business. And then the university has to divide up that founding split between the university itself and the operations of the tech transfer office, the departments, the inventors of the technology. So they have policies for doing all of that. And as you said, the whole world has been on a journey of learning what are sort of best practices for doing this spin out. In the States, it's been going on for a bit longer. And so I think there are among a relatively small number of the leading science and technology universities, particularly on the coasts. There's a sufficient amount of data that best practice is fairly well established, and people know what standardized deal terms are. In the UK, every ecosystem is on its journey. Cambridge is probably right at the forefront of that. Simply because there have been so many spin-outs here, and the Tech Transfer Office is so experienced and sophisticated that they have a good understanding of what market terms are and what is a fair and sort of an appropriate set to do. Other regions of the country where the universities have fewer spin-outs, and maybe they've been doing it for less time, they just don't have the data set to understand exactly how to arrive at those numbers. So what UCIT did, and I think it was super helpful, was they came out, and this is sort of a trade body, effectively, of the leading tech transfer offices here in the UK, but also some of the US and European members as well, was to look at this and say it would be in everybody's best interest if we put out a standardized set of terms. Ranges, because every deal is different, and so a fixed number 6.2 or something doesn't make sense, but general ranges that gives everybody comfort that they're doing the right thing. The tech transfer offices worry about asking for too much equity and disenfranchising the founders, but equally asking for too little equity and not getting a fair return for the university and the taxpayer who funded the creation of the fundamental IP in the first place. Founders, would like to have a large stake in their own business, and investors expect them to see that as well. And so there's all these kind of tensions, and particularly in ecosystems that are still relatively young, and most founders are still first-time founders. So they're doing their first business, so they can't rely on the experience of the previous three that they did. They don't have a lot of data to go on. So having a set of standardized terms that everyone, TTOs, investors, experienced founders have signed up to and said, this is basically market best practice, and if you do something in these ranges, no one should be complaining. That can just short circuit the whole negotiation process, speed everything up, and everybody feels good about it. And so I think that was a hugely positive development that's sort of been able to cut through of a lot of the noise that's been going on.
A little bit of change of gears now. So, we spent a lot of time talking in there about the kind of, the detail of the university setup. But I wanted to move the conversation on maybe towards the earlier stage, the kind of pipeline, maybe pre-university or to be fair, that sparking of inspiration whilst at university. And that's the section on the transparency, the data and the celebration, which was great to see that was included in the report. So, it would seem that we've got a huge PR job to do here in the UK to make entrepreneurship more aspirational. I kind of describe that as your parents getting excited when you go home and tell them that you're going to go and try something crazy, rather than them thinking you're insane by turning down an opportunity to go and work in the city or something like that, So it just feels like we need to do a better job than just referencing people like Branson and Dyson and Dragon's Den. Everyone can probably name the CEOs of Tesla and Facebook, and whilst there's some pros and cons to that personality driven kind of CEO, how do we do a better job of inspiring the next generation?
Yeah, I mean, this is something I feel quite strongly about, actually. And when I meet with policymakers and they ask, what could we be doing? They're always surprised when I say, actually, I don't think we really need, or my top priority is not yet another regulation or another tax break or another, because we're already putting pretty high demands on the public purse here, but using that position of leadership to promote this sector and promote what we can do, I think is hugely important. I mean, from a personal perspective, I remember arriving in the Bay Area around 2000, driving around, going to work, listening to, there everyone listens to PBS in the morning, which is sort of the equivalent of the Radio Today program on Radio 4. And the discussion, a significant fraction of the topics would be about technology and celebrating entrepreneurs and what's happening in the different life science and tech and space sectors, and it was really cool. And I just remember thinking, wow, the conversation isn't quite the same at home. There'd be the the endless Daily Mail articles about margarine versus butter or something trivial like that, that sort of dumbs it down. But in terms of sort of celebrating leaderships and breakthroughs in science and technology and all that can enable in people's lives, not quite the same thing. Well, one of the best things I ever did in my career was I was a Kauffman Venture Fellow. So this is a program for essentially converting PhD scientists into investors. It's a 2-year program sort of learning best practices and how to do what I do now. And I learned about Kauffman Fellowship. There was an advert on the radio. Are you a PhD scientist who's really interested in sort of the commercialization of this, want to have an impact thing? And can you imagine having something like that? Well, we do have something now called the Science and Technology Venture Fellowship. It's just been launched. I'm delighted to see it. But we need more things like that. Yeah. With regard to sort of the heroes to celebrate, we have a portfolio full of them, of charismatic, dynamic, entrepreneurial scientists. When you come to our annual investor meeting, we always try to spend as little time as possible listening to me drone on about the numbers and get out the way so that we can put the CEOs and the founders of our companies in front of our investors, because those are the ones that generate the excitement in the room when they're talking about what they're doing and the potential it has. There's so much potential to showcase more of that, and we need to.
I mean, it's maybe this is a personal rant, but when you look at something like The Apprentice with Alan Sugar, I just cannot believe that something that paints such a toxic picture of how business is done is celebrated, because I appreciate it's entertainment at the end of the day, but that's one of the few mainstream opportunities that young people get exposed to, and the way that they rip each other apart and those interviews that they go through at the end to win this investment. I mean, Oh my God, anyone that's worked in business knows that's a million miles away from what it's really like. So it just feels like we've got to do so much better than that.
100% agree.
It's just bizarre. Anyway, okay, so rant over. So segueing now to kind of towards the end of the conversation. At the point of publication, government accepted all of those recommendations. So can you give us a bit of an update on, what's happened since the report was published?
Yeah, I'm delighted actually. So when the Chancellor asked me to work with Irene on this review, I did pause. I'd never done anything like this before, so I did pause for sort of 48 hours and called a few people and took some advice. And the advice I got was, well, there's an opportunity to do something really impactful and helpful to the ecosystem that would be good for the country. But a lot of reports just end up on the shelf and nothing ever happens, and that you could spend a huge amount of time and not have much impact. So as Irene and I were working on this, we spent a lot of time with the civil service making sure we were making recommendations that were implementable, that could actually move the needle, and we could see a real change relatively quickly. And because there was some low-hanging fruit that was available there. So I'm delighted to say, so there was a 1-year review published by Research England a few months ago. And we had a bit of a celebration. So I believe over 50 universities have signed up to the recommendations of the review. So this is things like adopting the UCIT equity terms that we were just talking about, including all of the Russell Group universities. We're starting already to see the data of businesses that have been formed in the last couple of years where the equity splits are coming out, and they are falling, I think. Generally speaking, equity allocations were too high, and that was slowing down business creation and disincentivizing founders and investors. And they have come down, I think, about 10 or 11 percentage points over the last year. So the early signs are extremely positive. And I think maybe even more than that, the sort of the sentiment in the sector, which had got a little bit acrimonious, because when any deal is being negotiated and you're arguing over money or percentages and stuff, that can sort of sour things a bit, and you just want to get through that as quickly as possible and get onto the positive bit, which is building a business. The sentiment has improved. I think you don't see any newspaper articles anymore sort of complaining about this equity splits thing. All of the conversation now is actually about scale-up capital, which is an important topic. But that's, in some sense, that's a high-quality problem to have. It means we're creating more high-quality businesses that we want to scale up with more capital. So I think we're in a really good place, and I'm really delighted to see it.
You've actually predicted my final question, actually. The implication of all of this is that you touched on earlier in the conversation, the UK is now getting pretty good at the early stage financing and support for startups. The kind of the conversation topics right now is always around the scale-up capital. So if we are, if we do a better job of creating these homegrown companies, what do we need to do to keep them in UK ownership?
Well, yeah. So, okay, keep them in UK ownership and keep them operating and creating great jobs and economic growth and being inspirations to the next generation leaders all here in the UK. The way we've always thought about this in CIC is I'm generally not a big fan of mandates or constraints or guardrails or golden handcuffs or however you want to think about it. But what we want to be doing is giving the leadership of our businesses, those founders and leaders, high quality options. So the knock on Cambridge 10, 20 years ago was that we were the spare parts engineer for the world's technology companies. Great technology would be invented here, and just at the point that it got to sort of commercial traction, it would be acquired by some big company. So the benefits would go to global consumers, but the profits would go to the shareholders of pick your US tech company. And there wasn't any lasting benefit here in the UK. There wasn't any infrastructure that was created. There wasn't that sort of cadre of serial entrepreneurs that we want to grow businesses. So how do we reduce that effect? Well, the bigger, why were people selling those businesses at such early stages? It was principally because to grow those businesses further here required capital, and that capital wasn't available. So I'm not going to tell an entrepreneur not to sell, but what I want to do is give them a term sheet for an attractive scale-up financing so that they can grow their business here, and give them all of the access to talent and access to infrastructure, policy support, regulatory support, all of the other things that you need to build a business. And that is happening. So we have principally, through the last 10 years, been an early stage venture fund. We announced our first, what we called Opportunity Fund, Growth Fund, earlier this year. We're blowing the doors off on that one. There is amazing demand for scale-up capital. I think there's a huge opportunity for us to grow that particular pool of capital. We're seeing other investors starting to come alongside us here. We haven't yet talked about Mansion House and pension funds. That is, of all of the things that Jeremy Hunt led on towards the end of his tenure as Chancellor, and now Rachel Reeves has picked up and I think supported very strongly, this, should we say, nudging of our institutional pension funds to get in the game in a way that their peers around the world have done for the benefit of their pensioners and getting more attractive returns and being involved in their domestic economy, I think is a hugely positive thing. And we are seeing that bearing fruit. We are already raising money into our funds and into our companies from those Mansion House signatories. So that's a huge positive. But just more generally, I think there's a bit of a chicken and egg thing here. It wouldn't have made sense to raise a multi-billion pound science and technology growth fund in the UK 10 years ago because there wouldn't have been much to invest in it. Now it absolutely does. The opportunities are there. And the nice thing about the private sector is it's pretty nimble. So when there are investment opportunities, capital flows in to address those. So we're seeing that happening quite quickly. I'm definitely an optimist that more scale-up capital is available, more will be coming. And we need to make sure that the best opportunities are available for those funds to invest in.
Yeah, it's an exciting time to be sure. Andrew, thanks so much for your time. I really appreciate you coming onto the podcast. It's been a great conversation.
Thank you. Today's show was produced by Joe Donaghy of Cambridge TV and supported by our media partner Business Weekly. The Cambridge Tech Podcast is available on all major podcast platforms and on cambridgetechpodcast.com. If you've enjoyed this podcast, please give it a 5-star review. It'll really help others discover the show.